Hello dear traders, I'm Maria Staradop and this is the review of crypto analytics from fx.co. It's the 25th of April, today Tuesday, and in our today's review, first we will discuss what really stands behind the recent Bitcoin's growth. And meanwhile, the cryptocurrency market is declining, and we will observe technical picture and forecasts for Bitcoin and Ethereum and what to expect from them in the near future. And we will start with an article by Paolo Greco, and here Paolo discussed the following question. What exactly was behind Bitcoin's impressive growth recently? And his opinion is the following. The fact is that all started with the US inflation reports for January and ended with the US inflation report for March. It was after these two reports that the first and the last growth spirals of the cryptocurrency were shown. And it should be understood that inflation itself has no effect on Bitcoin, and many experts have long argued that Bitcoin is a hedge against inflation, forgetting that in many developed countries where the largest number of crypto investors are concentrated, inflation in normal times does not exceed 2%. What should we protect ourselves from? When inflation began to rise and remained at a super high levels, Bitcoin's price was falling rather than growing. Therefore, there has never been any correlation between inflation and the cost of Bitcoin. Bitcoin remains simply an investment instrument with high volatility and high potential profit. So what prompted traders to become more active a few months ago? Only rumors that the Federal Reserve would soon end its tightening of monetary policy, Paolo thinks. However, it should be noted that the Fed is still rising rates, and it turns out that the crypto community has reacted to an event that hasn't even happened yet. Moreover, it should be understood that the end of the tightening cycle itself does not benefit Bitcoin. Only a decrease in the rate can stimulate its growth, and the yield of a safer assets will start to decline. It turns out that we are already observing the market's reaction to future rate cuts, which will not happen until at least 6 or 7 months from now in a best case scenario. Such a point of view on the topic. And now let's have a look at the chart and see the Powell's forecast. On the 24-hour chart, Bitcoin has begun to correct and has consolidated below the 29,750 level, and no less importantly below the 100% Fibonacci level. These two levels represent a support or resistance area, the overcoming of which allows for movement in the corresponding direction. Therefore, Paulo says we believe that small sales are now appropriate, targeting around the 24,350 level. And now let's observe another point of view on Bitcoin by Ralph Shedlam. The article is quite fresh, it was written today. And Bitcoin crashed in the short term and was trading at 27,322 at the time of writing. And after its massive drop, it has tried to rebound, but the downside pressure remains. And in the short term, the crypto could try to test and retest the near-term resistance levels. As you can see on the 4-hour chart, the crypto ignored the level 27,723 and the median line of the ascending pitchfork, signaling more declines. Still, after its sell-off, the rate could try to challenge the median line. False breakouts through resistance levels may announce a new downside momentum. The current sideways movement could represent a bearish pattern. So Ralph's forecast the following, that a valid breakdown below 27,140 activates more declines and brings new short opportunities. Okay, let's have a look at the chart of Bitcoin for the moment. It's the 25th of April. And Bitcoin opened today at the point 27,535, and now it is trading at the point 430. So, according to both analysts, well, it's a little below. That very resistance level. However, it's really close to that very important level that could activate more declines. So, according to both analysts, the short-term forecast is bearish for Bitcoin. However, it hasn't reached the important points yet. Now let's get to Ethereum and another article by Sebastian Seliger. Let's have a look at the chart, and the article is also quite fresh. It's written today. The Ethereum American pair is approaching the 50-day moving average on the daily time frame chart, but on the 4-hour time frame chart, the 50 and 100 moving average was violated already. Any violation of the daily moving average dynamic support might result with more downside for Ethereum. The momentum is weak and negative on the chart, so the bears are in total control of the market. On the 4-hour time frame chart, the momentum hit the extremely oversold market conditions and is trying to bounce. The next target for bears is seen at the level of 1,780, 8 and 1,742. The nearest technical resistance is seen at the level 1,888. Okay, let's have a look at the chart of Ethereum for the moment. It's the 25th of April, and Ethereum opened today at the point 1,847, and now it is trading at the point 1,829. So, in fact, it's somewhere in the middle between the technical resistance and support levels Sebastian mentioned. Somewhere in the middle. However, it's so far declining a little, but as we know, it almost always follows Bitcoin, so probably the momentum is also bearish on the chart. We will see. Anyway, this is all for today. We will see each other in our next review tomorrow. As usual, I wish you profitable trading and have a nice day. Until next time.